Hello, traders. Gary Wagner here after 2 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 18th day of February, 2021, and this is the Daily Report for Gold and Silver. It is not the news I like to report to you, but we did have a sharp sell-off in gold today, trading down about $27, moving in Australia and giving up a couple more dollars. Our stop has not been hit, but it is precariously close. We'll talk about the key level, the line in the sand that gold needs to hold before we believe it's moving into absolute bearish territory. Let's take a look at the show. Traders, it was an absolutely brutal day with sharp downside pressure in gold. Gold closed or fixed in New York at $1793.70, putting it down about $29.50. It is currently trading at $89.60, down $9.40 on the day. While we did not get stopped out, as our stops are at $19.80, we are precariously close to that price point, and I was not expecting this type of strong pressure that we're getting. We'll look at that when we pull up our charts. Traders, I want to start the show with a line chart representing gold on top and silver on the bottom. And the reason that I am using this chart is we did receive a question from David W., one of our long-standing members, and what he's saying is some traders are long silver and short gold. Have you ever seen gold and silver move seriously in an opposite direction? The quick answer is no, I've not seen this before, and it seems highly likely that we will see silver outperform if the markets move up. We've talked about that many times, that it tends to have a greater percentage drawdown and a greater percentage gain, but it seems a little bit out of whack. And the obvious answer would be the industrial component of silver that is lacking in gold. Nonetheless, a play of being short gold and long silver makes excellent sense. And traders, when we look at this chart, and this chart creates a long data set for our Fibonacci retracement, starting back in March at the lows of 1450, up onto these highs. And what we can see is we are absolutely at a line in the sand. What I mean by that is it is a critical support level. We can see it on a couple of different occasions, such as here, where it touched it. And most importantly, when you look at this particular area right here, you can see that once it traded, it found resistance at multiple points, but when it broke through, which is right in here, we were off to the races, and that was the impetus that really took this market up to these record highs. So a break below this support level at, call it 1773, could spell that there is a possibility that we will see $1,700. However, we could easily hold the support level, but today we were certainly under pressure, and today's candle is this one. This is followed through in Australia. We have to be extremely cautious at this area. Trader silver also sustained a major drawdown today. It closed at 27.30 and it is now at 27.19. Of course, we do have stops below that 25.98, so we still remain long silver. It is clearly easy to see when we look at a silver chart, this is a daily futures chart, that ever since we hit this golden cross between the 50 and 100, we've had that big spike up, but we've maintained ourselves above the level that is important to me, which is about 25.75. We are well above the 200-day, 150. More importantly, they are in the proper order. Proper order for a bullish market goes 200, 150. We're certainly not seeing that in gold, and we are seeing that in silver. Since we're long both gold and silver, my recommendation would probably be to lighten up on our gold. You can add to the silver, but try to even out that ratio since we do see silver outperforming gold. And traders, fortunately enough, even though the iShares silver was down 0.2%, 25.26, we went long at 22.95. We went long the second leg at 24.60 with stops at 21.95. That is the one position that both legs are in profit. 25.26, of course, we entered below that. The other thing that I believe is extremely noteworthy and very similar to silver is that proper order: 200-day, 100-day, 50-day, and a golden cross between the 50 and 100. We obviously want to maintain that. The fact that we have SLV and not GLD, and then we have silver and gold futures, we are overweighted in silver anyways, which is the way we need to be. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.